All right, welcome everybody. Welcome to today's live stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Welcome to everybody over on our YouTube page. Welcome to everybody over on our Facebook page. We are both live on Facebook and YouTube, just in case you weren't aware. Good morning, Jay. Glad to see you here. First person in the comments there. Awesome. Thank you, Jay, for tuning in. Glad you could be here. Hopefully, Glenn did a good job in the Jockey Club for you today. Before we get started, let me just make sure that everybody can hear me. So over on our Facebook page, if you're listening, you can hear this. Let me know in the comments that you can see this and everything's coming through fine for you. Over on our YouTube page, same goes for you. If you guys can hear me out there, everything's coming through fine. Let me know in the chat there that you guys are seeing everything and have everything working. So that way we have no issues going forward. Hey, Jim, hopefully you're doing well. Good morning, Seth. Thank you, Paige. Awesome. So, welcome everybody. Once again, my name is Patrick France, Senior Instructor here at VectorVest. Every single Thursday, I go live here, both on our Facebook and YouTube, where I discuss the VectorVest stock advisory, and our main goal here every single week is to help you become financially independent through the use of the stock market. So that's what we're going to be covering, is tips and tricks showing you how to really utilize the stock advisory app to make sure that you're consistently making money in the market and staying on the right side. Also helping you improve your investing, your trading, going over different techniques, different features that can really help you home in on the stocks you're looking for. All right, so as always, we'll start off taking a look at what's going on in the market, and then we'll jump into our topic for today. And then as always, we'll finish off with the fan favorite, where if you have stocks that you want to see analyzed, make sure to stick around towards the very end, and we'll analyze any stock that you guys are interested in less than 10 seconds. So with that, first off, good morning, Jack, said, Drew, Liddy, Ray, hello, Jeff, Mo, good morning. Hopefully you guys are all doing well. Let's go ahead, jump right into it. We have a lot to cover. Well, a lot for today. And then we'll start off right here on the homepage. So as we can see right now, we are 3 ticks into the yellow. Therefore, the market is neutral, and VectorVest does not advocate buying any stocks at this time. If we scroll down a little bit, we get to the color guard, where as we can see, we have 3 yellow lights all across the board. So therefore, that tells us we're higher on a day over day, on a week over week basis, and day over day. But we do have a lot of red lights from 5 trading days earlier. So therefore, we are going to see the best we can possibly get is going to be yellow most likely today. So we utilize these 3 indicators, the price, the RT, and the BSR, to help us get an idea on what's going on in the market and help get a general guide for the overall trend of the market. So for the first one we look at is the price, which is looking at the price of the VectorVest composite. Now, the VectorVest composite is an indexed average of about 8,700, 8,800 stocks in the US market. And this gives us a better representation on what's actually going on in the market, rather than just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500. And so when we look at it, we're looking at it and analyzing it on a day over day and week over week basis. So as we can see, we are higher on a day over day and a week over week, well, actually lower on a week over week basis. So therefore, we do have that yellow light still, regardless of what happens today. Then we get into the RT, which is looking at stands for the relative timing, and it's looking at the short-term price trend of the overall market. Now, this indicator is cast on a scale of 0 to 2, and above 1, the short-term trend is up. Below 1, the short-term trend is down. So at 0.94, as it stands right now, the short-term trend of the market is still down. And then we look at the BSR, the buy-to-sell ratio. Now, every single day here at VectorVest, we give a buy, hold, or sell rating on every single stock that we track. We compare the buys to the sells every single day to get an idea or an understanding on the overall health of the market. So when there's more buys and sells, the buy to sell ratio is going to be above 1, which would indicate overall market strength. And when there's more sells and buys, the buy to sell ratio would be below 1, or that would indicate overall market weakness. So all 3 of these indicators are comprised to come up with the MTI, or the market timing indicator. Once again, this is going to be on a scaling of 0 to 2. And above 1 shows that the underlying trend of the market is up. Below 1, underlying trend of the market is down. So at 0.87, we do see that the underlying trend of the market is still down currently. After that, we then get the trend column, which shows 2 parts of the trend each and every day. So the first part refers to the primary wave, or simply the weekly trend of the market. As we can see, it is down since we're lower on a week over week basis, or compared to 5 trading days earlier. The second part is looking at the underlying trend of the market, or simply the MTI. So since the MTI is below 1, the underlying trend of the market is still down as well. And then finally, we end up with the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, we never want to ignore a confirmed call change. As we can see right now, we still remain in that confirmed down situation. Now, before we move on from the color guard, I do want to point out one of the highlights here that we always focus on, and it's a saying that we have here at VectorVest, and that's keep your eye on the MTI. So when the MTI gets to a level of 0.7 to 0.6 in that range there, that generally shows the market's looking for a bottom. And right now, the lowest we've got after this sell-off that we've seen is 0.78, telling us that even though we're bouncing the last couple of days, we still haven't quite gotten to those levels that show a true oversold market that we would typically be looking for a rebound from. So keep this in mind as you move forward in your portfolios there. Good morning, Ron. Hopefully you're doing well. Good morning, Vanessa. Glad to have you here as well. All right, so just wanted to throw that out there. Key tip that you always want to keep an eye on. And now, last but not least, we always like to take a look at the advanced declines, because the advanced declines can tell us when there's strength in the market if we're looking to buy, or when there's weakness in the market when we're looking to sell. And the key here is we're looking for a 2-to-1 bias. So we're looking for, on an up day, twice as many stocks advancing than declining, and just the inverse on a down day. So right now we're sitting at about 65% of stocks moving higher and about 24% of stocks moving lower, clearly meeting that 2-to-1 bias. So therefore, if we're going to be placing a trade today, if you had to place a trade today, even though we don't advocate buying any stocks at this time, we'd obviously be placing it to the upside today. And then as we look at the major indices, the Dow is up 1.5%, the Nasdaq's up over 1%, S&P is up about 1 1/3, VectorVest Composite up about 1% as well. So all the major indices are moving higher, and we have the advanced declines confirming that move as well. But on a little bit longer term basis, we still don't have enough consistency in the market to really give us a confidence to say, okay, now is a good time to be buying. All right, and we're talking about consistency in the market. And today we're going to be focusing on stocks with that help you sleep better at night. You know, there's a lot of fear going on in the market with the whole Evergrande situation over in China. The fact that, you know, the government said they were going to come in and bail them out a little bit or give them some money to help pay off their local debts. But that still leaves everybody else around the world left holding the bag and left not getting any money for the money that they've loaned them. So there's still a high probability of contagion coming out of the Evergrande events that we've been seeing unfold. And therefore, there's still a lot of fear because of that. And then stateside here, we also have the government talking about the debt ceiling, not potentially raising it. You're already starting to see some conflict because of that. And you have major political figures such as Janet Yellen, the head of the Fed, saying that if there was a default in the US because we don't raise the debt ceiling, then there's not a whole lot the Fed can do to try to prevent that or try to soften that blow that's going to take to the US markets. So therefore, you do have that serious threat to the markets as well that a lot of people are worried about right now. You know, there's a lot of jobs if the government shuts down that will be lost. And, you know, if anybody's been in the market for a while, you're probably familiar with this. This probably seems very reminiscent to, I believe it was the 2011, 2012 times that they had to go through this same situation on the debt ceiling, said they weren't going to raise it. They bickered and moaned about it. They, you know, each try to stand their ground on both sides. And then they let the debt ceiling pass. We got our credit downgraded for the first time ever by the S&P 500 or by the S&P Standard & Poor's. And then all of a sudden, you know, after that happened, they finally got their act together. They finally came together, agreed upon it, and they raised the debt ceiling anyways. So right now we're just seeing a lot of politics playing out. A lot of people trying to stand their ground, make it look like they're doing the right thing, just so they can go home and for re-election time, you know, have some talking points. And unfortunately, you, me, the average investor, the average American out there are the ones that have to pay for this. So yeah, it's very understandable to see a lot of people worried, especially if you don't remember that or you weren't trading or weren't invested in the market. Back then, this could seem like, this could seem like a pretty scary thing, but just rest assured we have been through these situations before. They let it run up all the way to the very end, and then they finally get their act together and they finally get it done. Appreciate that, Richard. So, while I do understand the fear, just to let you know, there shouldn't be as much fear as people are making it out to be. All right, so if you are fearful of that, we have some of the best stocks available to be able to help offset that fear and help you, not have to worry about your portfolio nearly as much as you should be. So what we have to do, all we have to do is jump into the premium watch list here. And once again, the premium watch list are something that you do have to have the premium version of the mobile app, but everybody who has the premium version of the mobile app or higher will automatically get access to these. So we jump back into the premium watch list, and then right down here we get the guy holding up the 5 stars. These are 5-star stocks essentially, and what we're looking at is the safest stocks with buy ratings. So the reason why we're putting a focus on safety or RS is because stocks with a high RS rating have consistency and predictability in their financial results. And people put money, especially when they're fearful, into stocks that have a lot of money on hand or that have consistency because they don't want to take on that extra risk. So here we're looking at not only the stocks with the highest relative safety ratings, but also that have to have that buy rating as well. So if they have a high RS, but they're not really doing a whole lot, then they're not going to make the list. The containers are backed up for weeks. That's right. Actually, Jay, I saw something I don't know how true it is. I haven't looked into it, but I did see a picture somebody took on one of my social medias that, showed a whole bunch of shipping containers just backing up on the coast. I believe it was California. Haven't really gone anywhere. They just keep piling up. But nobody wants to bring them on shore to get those goods out there. So it's kind of interesting. I don't know, once again, how true that is, but if that is the case, that there definitely seems to be more going on than what meets the eye. All right, so as we can see here, we have a lot of big names that you're most likely familiar with. Google coming up at number 1, Align Tech, ALGN coming up as number 2, West Pharmaceuticals, EPAM, FTNT, ASML, ODFL, a lot of big names that you'll probably be familiar with when we look at these lists. So let's go ahead and just run through them. Looking at Google first and foremost. We'll start off on the analysis and then we'll take a look at the chart as well. And as we can see, RV is sitting at 1.61. Now, the relative value is looking at the long-term price appreciation potential of the stock over the next 1 to 3 years. So at 1.61, that tells us, obviously, Google has some great long-term price appreciation potential here. Second is RS, or relative safety. Now, the relative safety is looking at the amount of risk involved in a stock. So if it's above 1, that tells us there's less risk involved, and below 1 tells us that there's more risk involved. At 1.51, tells us there's less risk involved with the stock because they have more consistency, they have a longer track record, and they continuously grow their earnings, or they're continuously making money and growing that money supply that they have. Then we look at the RT. Now the RT is where we start to see a little bit of hesitation here. At 1.08, it is below that level of 1.1 that we typically look for, but it still is in an uptrend, just not that strong of an uptrend currently. But these stocks are safe, they have great consistency, so therefore, while they're pulling back a little bit, or while they're not maybe blasting off to the sky, look at what's going on in the market, and they're doing relatively well compared to that. So I see a few people asking to look at some stocks. As always, guys, we will analyze your stocks. Make sure to stick around towards the very end, though, so that way we can get to those. Also, if you want to see your stocks analyzed, don't forget, as always, smash that like button on both sides, Facebook and YouTube, and share this video out with all your friends, family, and if you're on our Facebook page, make sure to like the VectorVest Facebook page so you get notified of any new events coming out. And if you're on our YouTube page and you're not already subscribed, make sure to hit that subscribe button and turn on notifications as well. All right, so overall, the stock's definitely a good stock. We take a look at the graph. Let's go ahead and zoom into a 1 year. We can see it did pull back slightly, but look at what it's done. We'll zoom in now to 1 month. Gap down on Monday. Since then, has been steadily recovering. Now, we look at that 30-day going back to 1 year. We take a look at that 30-day weighted moving average that we have on the graph. 30-day weighted moving average looks relatively good as a timing mechanism to help you find entries and your exits. We've talked about utilizing moving averages in the past. And, the 30-day moving average on this particular stock seems to be a relatively good moving average to use. Now, one of the things I will say is, you do see the DPO at the bottom, that momentum indicator starting to wane a little bit, dropping. It did drop below 1 for the first time in a few months, but every time that it's dropped below 1, it's stayed there for a very brief period of time before it gets back above 1 and starts moving higher. Let's see. someone in Long Beach and they see the ship sitting there. Besides inflation, we'll have to deal with the extra supply or extra shipping costs. Yeah, very, very true. Look up safe stocks before momentum direction that are penny stock prices. So Daniel, that is that's an oxymoron. You're not gonna find penny stocks that are gonna be safe stocks. There's a reason they're a penny. So you're not gonna find those kind of stocks that are penny stocks that are safe stocks. Simple as that. The reason they're a penny stock is because they have a lot of risk involved with them, and therefore you're gonna have to take that volatility and that risk if you're gonna be investing in penny stocks. So hopefully that answers your question. What's your favorite rocket stock if we get a primary up? I don't know. I haven't really thought about that, Michael. But we can take a look in a little bit. All right, so there's Google. Obviously, a great looking chart. If we go up to the settings here and change it to EPS or earnings per share, because as we know, if we're looking for safe stocks, we want to look at their earnings and look at what Google's earnings have done over the last year. Steadily rising from bottom left to upper right, same as we're seeing in the price action. So money goes where money grows, and seeing this earnings per share steadily rising like this tells us that their money is growing, and that's where money is going to go into. So if you're fearful, buy stocks. If you're worried about what's going on in the market, buy stocks that have good fundamentals, less risk associated with them. That way, they're less likely to be influenced if the market does have a sell-off or a correction does occur. They're cushioned, if you will, from major market turns. All right, not saying that it's going to cushion you completely from a major market turn, but you're going to be less affected in stocks like these than you would be if you're in stocks that are, $5, $10 that are more aggressive or speculative plays. All right, so that's the first one, ALGN. ALGN is actually one I've personally watched for years now. They basically do that Invisalign type of retainer that helps straighten out your teeth. And I demonstrated this stock in one of the videos that I released last night over on our YouTube page. And this is one that, even if a recession hits, even if the China thing spreads all across Europe, Africa, Middle East, everywhere, then comes into the United States, people are still going to be needing these kind of products to be able to do at home. And therefore, you have that safety factor built in with this one. I do like this one personally a lot. I've been watching it ever since it was, $100 a share a few years ago to where it is now. So this is definitely a great play. You can see their earnings are a little bit more inconsistent, but overall, the company is steadily making money and continuing to make money going forward as well. All right, so that's the next one. WST. WST, nice steady rise in price from bottom left to upper right. You can see every time it hit that 30-day weighted moving average, it tends to bounce off of that and start to move higher. We just hit that 30-day weighted moving average not too long ago, and now we're starting to see it moving higher as well. Earnings steadily rising. You can expect to see price following along with that pattern as well. So these are some great stocks to consider when looking at, what do I do with my money? I don't want to be getting into those high growth stocks or those volatile pharmaceutical stocks. You just want to be more consistent. You want to find stocks that make money and that have a large cash pile essentially, because stocks like that are going to be the ones that take less of a blow if the market has some major correction. You may wake up if you're an aggressive stock and see it down 20, 30% one day, whereas these may be down 5, maybe 10 max, and then you can easily recover from that. Not penny stocks, good stocks at similar prices is what I meant. So Daniel, if you go take a look over, I did one the other day. I think it was like a week or so ago. Cheap stocks, cheap safe stocks. I showed some of the safest stocks below. I believe it was $15 my max. I'd recommend definitely going and checking that out there. Any thoughts on sorting by CI instead of RS? So yes, CI is great. If you're already dealing with high relative safety stocks, utilizing something like CI is really, really powerful. So good suggestion, Jim. So CI, for anybody who's not familiar with it, is the stock's ability to withstand severe lengthy price declines. In essence, I like to call it the snapback factor. So if it's above 1, the higher above 1 it is, the stronger that snapback is. So if it does have a sell-off, it does have a pullback, stocks with a high CI tend to rebound and hit new highs very quickly, whereas stocks with low CIs tend to not rebound and continue to move lower or move sideways, if you will. So these are resilient stocks, a resiliency factor if you want to look at it that way as well. And utilizing it on safe stocks with buy ratings is a great way of doing that. I'm hoping one day soon we can get the RS times CI sort added into the mobile. I brought it up again recently. They said they were going to be looking into it. I've talked about it many times here, but yeah, RS times CI is a great, powerful sort to be able to use. And if we could use it here, that would be amazing. And that's what I'm really hoping for. As soon as I get confirmation that that's getting added, of course, I would bring it to you guys first and foremost. And Drew's bringing it up right now. RS times CI works really well. That's exactly the sort that I was using for yesterday's video that we posted on our YouTube channel. So yeah, RS times CI is a really, really powerful sort. Unfortunately, it's not in the mobile app. Hopefully it will be soon though. All right, so coming down here, you get a little bit of a different look. Dillards, let's go ahead and run through these. Dillards, you have great long-term potential, but you are removing some of that relative safety. So this is where the RS times CI could really add an extra benefit rather than just looking at these and utilizing the CI sort. So that's where the difference really comes in there, Jim, on the mobile compared to like the desktop app. But both of them could be great opportunities. For example, this one has great long-term potential, still safer than the average stock out there, but you're getting a lot more capital appreciation currently with a strong RT or a strong uptrend right now. So yeah, of course, the stock's still going to be favorable. Looking at HRI, great long-term potential, but because of that move that you're seeing right now, you are lacking a little bit in the safety. You're still safe overall, but not nearly as much as what you were when looking at Google or ALGN or those. Hey, Norma, thank you for the stars. I greatly appreciate that. Once again, thank you. If you're over on our Facebook side, show Norma some love in the chat there. Really appreciate it. Thank you. All right, so yeah, getting back into it. Look at the RT though, 1.77, a really strong short-term uptrend. Looking at the graph, you saw a little bit, we'll go into a 1 month. You saw a little bit of pullback after the news on Monday, but then it's quickly recovered and moved higher. So if you're looking for, a little bit more aggressive, still good safety, but not nearly the best of the best, looking for a little bit more momentum, this could be a great way to take advantage of that, or a great basket to look at there. Michael's saying RV times RS is my fave. Yeah, RV times RS is definitely a great opportunity there. What stop means, it mentioned at the top of every stock. Patel, great question. So the stop that you see there, if we go in here, let's actually go back, go into the stock analysis report, scroll down to the stop. There we go. So the stop is basically our final line in the sand at the most simplistic definition of it. So it's based upon a 13-week moving average that we adjust per the company's fundamentals. So when you're looking at stocks with the high RS that have good solid fundamentals, we'll lower that 13-week moving average down a little bit to give that stock more wiggle room essentially. But if you're looking at more aggressive or speculative stocks, we'll take that 13-week moving average and actually adjust it closer to the price of the stock to be able to trigger that stop or that sell signal a little bit faster. So the stop price is essentially a 13-week moving average, just proprietarily adjusted based on the company's fundamentals. This is more of a final line in the sand rather than a recommended sell point. Now, you can use that, but if you do use that stop price as your sell signal, know that it is a more conservative sell signal. It's going to typically, especially in high momentum stocks, going to be further away, so you are going to have to sit through a wider swing before that stop is met. But it allows it to give it more wiggle room essentially there. So The stop price, though, the reason we give that stop price is because whenever the price of the stock falls below that stop price, that is the one rule that we use to generate the sell rating on a stock. So as we all know, the buy, hold, and sell ratings are based upon rules, not personal opinions. And a lot of people get that confused sometimes. And so I want to make sure we address that as well. So the buy, hold, and sell ratings are based upon rules, and they're not personal opinions. So as long as the rules are met, you're going to get a stock that has the buy rating, for example, or the hold or the sell. But the overall market timing that we see every single session at the very beginning and at the very end, that trumps any individual ratings that we give on a stock. So when we say we don't advocate buying stocks, it doesn't matter if they're buy, hold, or sell rated. We obviously would hold off from buying for that day. And same goes for the opposite or the sell rated stocks there. All right. Lydia's asking, where is the best place to look for stocks for my IRA retirement portfolio? Liddy, what we're doing here today is a great place to look for retirement long-term holdings. Safest stocks, obviously you're not going to be using CI, but the RS is a great sort to use to find stocks that you can just simply get into, hold on to for a while, and not have to really worry about. These are the stocks, in your retirement accounts, you're not going to be day trading, or you're not going to be buying whatever stock Wall Street bets is pumping that day. You're not going to be trading those stocks in a retirement account. These are the stocks, safe stocks that you can buy and know that, if you go away for a year, come back, you look at your portfolio, it's going to be higher in a year's time. These are the stocks that can do that for you, and these are the stocks you want to have in your retirement account. So hopefully that helps you out. And also, there could be a few caveats here or there depending on like how long you've got towards retirement, and are you more focused, are you wanting to focus more on dividends or those types of things. But in general, those are some good rules to follow there. Yeah, Jay, give everybody symbols to buy. All right. So if you guys have questions on these safe stocks, let me know in the chat. Let me know in the comments. But if you don't, if this seems pretty straightforward, if you guys are understanding it and hopefully learn something today, as always, hit that like button, share this out with everybody. Let's continue to grow this awesome community that we've built over the last few years here, and continue to teach others how to become financially independent through the use of the stock market. So while we're doing that, if you guys have stocks that you want to see analyzed, go ahead and start putting them in the chat. Go ahead and start putting them in the comments, and we'll go ahead and start to analyze your stocks and show you how you can do so in less than 10 seconds. Realistically, there's nowhere else out there that's as fast at analyzing a stock than there is with the Stock Advisory app. Plus, you have the added benefit that the Stock Advisory app can go with you wherever you're at. All right, so let's go ahead. Hit that magnifying glass in the upper right. Mario coming in with the first one, mRNA. So as we just talked about at the bottom here, we get the 4 indicators. We'll start off, work our way slowly through those, and then we'll move on to more. So the first one is the RV, or relative value. Once again, looking at the long-term price appreciation potential compared to a AAA corporate bond over the next 1 to 3 years. Now, all 4 of these indicators are cast on a scale of 0 to 2. So as long as you can remember out there that above 1 is good, below 1 is bad, that's as hard as you need to make your investing. So relative value at 1.99, great long-term potential. Next one, relative safety. So the risk factor. Is there more risk or less risk involved with it? At 1.15, it's above the level of 1, telling us there is less risk involved with this stock. So that's a good thing. Third, RT, relative timing. The technical indicator, if you will. Looking at the short-term price trend of the stock, 1.74 tells us there's great momentum to the upside right now on a short-term basis with mRNA. So therefore, the overall stock is definitely favorable. All right. Let's go ahead, take a look at the next one, BAC. Also, you're welcome, Liddy. Hopefully that helps and helps you get a good idea, or at least a starting place of where to go next to look for stocks to add there. All right, so BAC, great long-term potential, less risk associated with it. You're in a steady uptrend. Overall, the stock's favorable. Not even 10 seconds. I already know more about this stock than if I sat down with any other, information about the stock for an hour, I just came up with the same information that would take me hours, if not longer, to do right then and there. All right, so let's see. Coin, COIN. Coin, great long-term potential. Does have a little bit more risk associated with it. No surprise there. It is a newer stock in the public market. It is in a steady downtrend. Overall, stock's about average. Nothing great. Let's see. ES. There we go. Great long-term potential, a lot of risk, really strong short-term uptrend right now though. So it's a momentum play, more of an aggressive play. Overall, good play right now. BMY, great long-term potential. Does have solid fundamentals, but it is in a steady decline right now. So it's a great stock, good fundamentals, just not the time to be long in it. Overall, favorable, but need to see that timing pick back up. All right. NIO. A lot of risk involved, or poor long-term potential, a lot of risk involved with it. It is in a steady decline. Overall, the stock is not favorable. Let's see what else we got. IMPUI, great long-term potential, a little bit less risk than the average stock out there. However, you're not in an uptrend, you're in a strong downtrend, so therefore it's a good stock, just not the time to be long in it. Javier is asking, what if it's overvalued? Great question. So overvalued and undervalued is something that, as a prudent investor, you definitely want to take into consideration. It's not the end all be all though. It's if you see a stock that's overvalued, it just gives you a little bit more of a caution light than anything else. It's telling you, be mindful that you are paying a premium for this stock at this time. Does that mean just because it's overvalued, the stock can't make you money? No. Overvalued stocks can make people money all the time. Just depends on if that meets their investment style. If you're an aggressive trader and you're looking just for momentum, doesn't matter if the stock's overvalued or not, you can still have some great opportunity to make some money in it. So for long-term holdings, you try to want to find stocks that are undervalued, but if they are overvalued, just know that means you're paying a premium for it at that time. All right. HUT, let's go ahead and pull that up. HUT, good long-term potential, but does have a little bit more risk associated with it. You're in a really strong short-term uptrend, so overall, stock is favorable right now. NXST, great long-term potential, less risk associated with it. You're in a steady uptrend, so overall, stock's favorable. QYLD, let's see. QYLD, so it's an ETF. When looking at ETFs, the RV and RS are always going to be pegged exactly at 1. So analyzing ETFs with VectorVest is super simple. All you got to do is look at the RT. At 1.1, it tells us it is in a steady uptrend, so overall it's favorable. However, I will throw out that caveat. Anything below 1.1 is my personal threshold of, saying, maybe I'm not going to get into it. So at 1.1, you definitely want to be careful of that RT right now. Vanessa, I just did coin a few seconds ago. ARVL, let's see. ARVL, poor long-term potential, a lot of risk. It's in a steady decline. Overall, stock's not favorable. Palantir, PLTR. All right, PLTR, a lot of risk, poor long-term potential. You do have some short-term momentum to the upside, just barely enough momentum to get this thing about average overall. Now, if you're Glenn, you're going to say, oh, this stock's amazing. LNG, great long-term potential, less risk associated with it. You have a steady, consistent uptrend, so overall, stock's definitely favorable. AMKBY, okay. Great long-term potential, less risk associated with it. You're in a steady uptrend, so overall, stock's favorable. CRM, great long-term potential, solid fundamentals, so less risk associated with it. You're in a steady, consistent uptrend. Overall, the stock's favorable. Ron, check out our YouTube page. We have a lot of videos on how to find stocks like that. KOLD, ETF, natural gas. So looking at the RT with an ETF, 0.25 tells us it's in a steep decline, therefore definitely not favorable right now. GSM. Poor long-term potential, a little bit more risk than the average stock out there. However, you do have a really strong short-term momentum play at your hands right now, so overall the stock's favorable. APPS. Great long-term potential, less risk associated with it. You have a strong short-term uptrend, so overall stock's favorable right now. I will do this one for Jay because I failed to get to it earlier. Here you go, Jay. Do an extra. Poor long-term potential, a lot of risk. You're in a steady decline. Overall, stock's not favorable. Had to get that out here at least one point today. SHW. Great long-term potential, less risk associated with it. You are in a slight uptrend below my personal level, but definitely something to keep an eye on going forward. Overall, it's a good stock, but definitely keep your eyes on the RT as you move forward in that one. RWLK, poor long-term potential, a lot of risk associated with it. You're in a steady uptrend. Overall, stock's favorable, but know that this is a speculative play here. ARKK, so ETF, looking at it, RT of 1.01, basically flat. It's about average. Curie, CURI. Poor long-term potential, a lot of risk with this one. You are in a steady decline. Overall, it's not favorable here. All right, let's see what else we got here. CDNS. Good long-term potential, less risk associated with it. You're in a steady, consistent, strong uptrend, so overall, definitely favorable here. VYNE. All right, VYNE. Poor long-term potential, a lot of risk associated with this one. It's falling like a rock. Overall, definitely not favorable. I have it on my mobile, but how can I see this review on the desktop? Vanessa, are you talking about the stream here today or VectorVest? Which one are you referring to? Let's see. QS, QuantumScape. Poor long-term potential, a lot of risk associated with it, but you do have a really strong short-term uptrend. So overall, not favorable enough to offset the amount of risk and poor long-term potential. But if you're a momentum trader, hey, money goes where money grows. WIX. Poor long-term potential, a lot of risk associated with it, in a steady decline. Overall, definitely not favorable here. LMND. Poor long-term potential, a lot of risk, steady decline. Overall, not favorable. So VectorVest, if you give our support a call, actually, you can go to vectorvest.com/install/VectorVest 7, and that'll take you right to the download page. But if you just signed up, it depends on what you signed up for. If you just signed up for mobile, you won't have access to the desktop. If you signed up for the desktop, then you'll have access to both the desktop and mobile. So I don't know. I don't have any account details or anything like that. But that is one thing to keep in mind there. All right. PAVM. Poor long-term potential, a lot of risk associated with it. You're in a really strong short-term uptrend, though, making it favorable overall. Just know it's a speculative momentum play here. VNRX. Let's go see. VNRX, poor long-term potential, a lot of risk, steady decline, overall not favorable. CC, good long-term potential, but does have a little bit more risk associated with it. You're in a steady decline. Overall, stock is favorable, just barely though. Really just, middle ground. Nothing spectacular here. On the VectorVest. Okay, so you have VectorVest 7. So the review, if you're looking for the review of coin, so in the desktop, go into the upper right-hand corner, click on the drop-down menu that says Tools, choose the stock analysis report. You can type in the symbol, whatever symbol you want. You can get the same analysis we're doing here from that report there. Let's see, OPAD, another Wall Street Bets play here. As you can see, this is what Wall Street Bets gives you, pump and dump. Poor long-term potential, a lot of risk associated with it. You're in a steady free fall right now, so overall, definitely not favorable. You're welcome, Chris. Let's see, getting back over on our YouTube, FLGT, oh. FLGT, great long-term potential, a little bit less risk than the average stock out there. You're in a state of decline now. Overall, good stock, not the right time to be in it. Let's see, ATLC, good long-term potential, less risk associated with it. You're in a steady uptrend. Overall, stock's favorable. LIT. So ETF here, looking at lithium. Therefore, your focus is on RT at 1.19. It does show that it's in a steady uptrend. So overall, the ETF's favorable right now. BNTX, great long-term potential, less risk associated with it. You're in a steady uptrend, so overall, stock's favorable. Crocs, good long-term potential, less risk, steady uptrend. Overall, definitely favorable here. CMRE, good long-term potential, less risk associated with this stock. You're in a strong, steady uptrend. Overall, stock's favorable. You're welcome, Vanessa. Hopefully that got you what you were looking for. Sorry about any confusion there. All right. MTTR, poor long-term potential, a lot of risk. However, you do have a really strong short-term momentum uptrade, so therefore it's favorable for you speculative momentum traders out there. ZS, poor long-term potential, a little bit more risk than the average stock out there. This is in a steady uptrend though, so overall the stock's about average at best. MELI, poor long-term potential, about average risk associated with it. You are in a slight uptrend currently, so overall stock's favorable. TTCF, poor long-term potential, a lot of risk associated with it. You are in a slight decline currently, so overall, not a favorable play. ADBE, good long-term potential, less risk associated with it. However, the timing is now dropped below the level of 1, so therefore it is in a slight decline currently. Still a good stock, but really got to be worried or careful with that timing there. RGEN, great long-term potential, less risk associated with it. You have a really strong short-term uptrend. Overall, the stock is favorable. Drew, it's actually interesting that you bring this up. I can't give too much information, but what I will say is keep your eyes peeled for next week's strategy of the week. And then also keep your eyes peeled for our YouTube channel after that. There's somebody that you all, some of you may be familiar with, some of you may not, that is really a big fan of this stock, and you'll find the answer to that next week. So make sure to stay tuned for that. KLIC has great long-term potential, has solid fundamentals, so less risk associated with it. You're in a steady uptrend on a short-term basis. Overall, the stock's still favorable. OBSV, poor long-term potential, a lot of risk, slight uptrend at best. Overall, stock's not favorable. NVAX, great long-term potential, a little bit less risk than the average stock out there. You are in a steady uptrend, so overall, stock's favorable here. NVMI, great long-term potential, less risk associated with it. You're in a strong short-term uptrend, so overall, stock's definitely favorable. All right, so that's going to do it for analyzing your stocks. If I did not get to some of them, I do apologize. As always, if you want to, you can always click on a link in the description below. sign up for the free 2-week trial of the mobile app and put it to the test on your own. You can do this on any stock out there at any time, wherever you're at. So let's go ahead, jump into the overview. And as we can see, we still remain 3 ticks into the yellow here. And so the market is neutral, and VectorVest still does not advocate buying any stocks at this time. We scroll down, we're still sitting at above a 2-to-1 ratio with the advanced declines. And then looking at the major indices, the Dow is up 1.5% still. NASDAQ pulling back a little bit, but up just shy of 1%. S&P 500 up 1.25%. VectorVest Composite up 1% even. So a slight decline in the NASDAQ. Everything else staying about the same so far. No real major moves in that since we started here today. So with that, I hope you all have learned something. If you did, make sure to subscribe to our Facebook or our YouTube channel. If you're over on Facebook, make sure to like the VectorVest Facebook page there. Turn on notifications and make sure to hit that share button on this video over on our Facebook. Share it with all your friends, share it with all your family. Show them how easy it is to become financially independent through the use of the stock market and make smarter, better, and faster decisions for themselves through the use of the VectorVest Stock Advisory app. So I hope you all have a great weekend. Enjoy your first weekend of fall. Take care, be safe out there, and make sure to be here at 11 a.m. Eastern next Thursday as we kick off our next live stream. So until then, take care. Adios. Toodles.